So normally when people ask me, what should I invest in if I'm new, if it's my first investment, I always recommend ETFs. I think they're some of the best types of investments to make in the stock market, especially if you're a beginner. I hold on to a few of them myself, but that doesn't mean that they're perfect. And if you're interested to know what to look out for before you invest in an ETF, especially if it's your first, make sure you check out this video. What's up guys, my name is Darren Jackson. Welcome back to the channel, or welcome if you're new. And if you watch a lot of my YouTube videos, then you know that I absolutely love ETFs. I personally believe that they're some of the best type of investments to make in the stock market, especially if you're a beginner. Now, if you don't know what an ETF is, then an ETF is basically a basket full of stocks. It's the easiest way to think about it. Now, ETFs typically mirror index funds, or they're inspired a lot by index funds. And if you don't know what an index fund is, some examples are the S&P 500, Dow, and NASDAQ. Those are the stocks that you hear a lot about in the news when they want to describe how the entire stock market does. However, with index funds, you can't trade those like regular stocks such as Apple and Tesla. But with ETFs that are pretty similar to index funds, those you actually can. Some examples of ETFs are VTI, which is the Vanguard Total Stock Market Index. So it's literally a basket full of every single stock within the stock portfolio. And you have my personal favorite, which is SPHD, which is the S&P High Dividend Low Volatility ETF. I've talked about this ETF a lot of times. If you haven't watched this video, make sure you watch this. It's pretty much a breakdown of the good and the bad with SPHD, but we'll also cover that in this video as well. But make sure you check that one out. So again, I personally love ETFs, and I feel like there's a lot of benefits into investing into an ETF. Primarily being, in my personal opinion, that ETFs are the most beneficial and best startup for a new investor that's investing into their first stock in the stock market. So I feel like there's a lot of benefits into investing into an ETF. For starters, and I'll repeat this again, in my personal opinion, I feel like ETFs are the best route to take for someone that's new to investing. If they want to invest in their first stock, I think they should lean towards an ETF. Now, I made a video a couple of weeks ago about how to avoid risk while investing in the stock market. Make sure you definitely check that out as well. But one of the things that I suggested was to have a stock portfolio filled with multiple stocks, assuming that you've done your research on those stocks, not just picking some to make your portfolio huge. But the reason I say that that's important is because the more stocks you have within your portfolio, the lesser amount of volatility that you're dealing with. So if one of your 30 to 40 stocks is not doing so great for a couple of months, then the amount of impact it'll have on the remaining 39 to 49 other stocks that you have isn't as much. And with ETFs, for every dollar you're putting into that ETF, it's being divided amongst tens to hundreds to even thousands of other different stocks. VTI, for example, covers the entire stock market. So you're looking at over 3,500 different stocks under that basket of stocks. With SPHD, my favorite, it has about 51 different stocks right now, but it's a little more exclusive than VTI. The other reason I think it's beneficial for beginners, especially at the start off, and a lot of people may disagree with me on this, but I personally feel like it reduces the amount of research you're having to do out the gate. That's important because when you're first starting to invest, you may not really understand what exactly you need to research, maybe besides the history of the company, what their growth is like, and if they pay dividends, if that's something that you're looking forward to. But with SPHD, for example, the alternative would be to research in the S&P 500 the top 50 highest dividend yielding stocks, but are also the top 50 least volatile. That may take a while, especially with the metrics that you have to look for and understand, when you can always just invest in this. And I always say, and a lot of investors say, the more time you give your money in the stock market, the more time you give your money to make more money. So you can always put money into an ETF, and over time you're learning more about what to research in, and you can pick those different stocks. The other reason I feel like it's beneficial for anybody to invest in an ETF is because the amount of passive income in the form of dividends that you would be gaining. Now with ETFs, I feel like you would get more of a consistent passive income, because the opportunity for that ETF to decrease the amount of dividends or rid of it altogether for a period of time because a particular company isn't doing well would decrease, because again, you're not dealing with just one stock that could potentially do bad over a period of time, but one out of at least 50 in regards to SPHD. So if one company within the entire 50 to 51 stocks under SPHD isn't doing so well, I'll still get paid dividends. And with SPHD, it pays 15 cents every single month. And that's another little cherry on top. You may get even more on passive incomes with ETFs because it pays more consistently. Now, I painted this picture about how amazing ETFs are, but that still doesn't mean they're perfect, and that doesn't mean that you should just invest into them with a blind eye. Just click on which one pops up first. There are definitely a couple of things, in my opinion, that you need to look out for. For starters, the first thing, in my opinion, that I would look out for is the sectors that ETF covers. That's important because you'll have an understanding over time how those sectors are impacted by worldwide news and anything like that. So with SPHD, for example, its top two sectors are utilities and real estate. And that's super important looking back at this year with this global pandemic that we're having, because one of the biggest sectors that was impacted was real estate. And that explains why SPHD took a dip within the first couple of months of the year, especially between maybe March and May. So even though ETFs shouldn't be as volatile as regular stocks, when certain situations happen that affect a lot of stocks within the real estate sector, it's going to affect that ETF. Doesn't mean it won't recover, but you'll know that you may temporarily see some volatility. The other thing that you definitely want to look out for is the expense ratio. Now, the expense ratio is an amount that you're paying to a group of people that are responsible for creating that ETF. Keep in mind, guys, these ETFs are basically mirrors of index funds, and index funds change a lot with the stocks that are under it. So for example, S&P 500 is the top 500 most valuable or highly traded stocks within the stock market. Tesla is now a new addition to the S&P 500 as of last week, I think. So in order for it to go up into the S&P 500, it had to knock one down. Now imagine over the course of time, the S&P 500 will change as far as what stocks are under that umbrella. And since SPHD is an ETF that mirrors it to a certain degree, SPHD might change as well on what 50 to 51 stocks are under it. So somebody's responsible for making sure they keep up to news with that. So you're essentially having to pay them. The expense ratio isn't something that you can avoid when investing in an ETF, but you can definitely limit on how much you spend. There are ETFs that pay a small expense ratio, like VTI, which I believe pays a 0.03% expense ratio, which means you're spending about $3 for every $10,000 that you put into it every single year. And with SPHD, it's a 0.3% expense ratio, which is $30 for every $10,000 you spend every single year. In hindsight, that doesn't seem like a lot, but again, with examples like VTI and other ETFs, you can definitely save a little bit more money. But again, in hindsight, it's not really that much, but it's definitely something you want to keep in mind of when investing into ETFs. Now, there are a plethora of other ETFs out there in the world. I have a lot of other ETFs that I invest into. Well, not a lot, but a decent amount. And if you want to hear about those, leave comments below and let me know. If you have any other advice of what you look out for when you invest in ETFs, or if you have a favorite ETF that you enjoy, definitely leave comments below. And make sure you check out some of these other videos, which I hope help you in your investing journey as they have in mind. I appreciate you guys taking the time out of your day to watch one of my videos. And until next time, take care.